Good morning, good morning. Good morning, everyone. Welcome to the Trading Syndicate. I'm JJ, vwaptrader1 on X. Hope you all had a good long rest this weekend. I almost said long weekend, then I realized it wasn't. How's everybody doing? Hey, Shark, how are you? I haven't forgot about you. We'll have a chat one of these days. Hey, Shanghai, how you doing? What's up, Troy? And welcome to the folks watching us on YouTube. Good to have you with us. Monday, the 4th of August. We're in the lazy days of August here, eh? Sometimes before trying to figure out what to do, I like to let a market trade after some change. And we have change, right? We have change. We had an uptrend with broke. Now everybody on Twitter is saying that there's a bear market after one day of liquidation. And then, of course, as soon as everybody says there's a bear market, the next session's up 30, 40 points, right? Hey, Kevin. Hey, Jag. Hey, Hank. How you doing? I got your message. Hope all is well. So, what were we looking at earlier? I'm looking at this 6240 level. The 6240 level, I feel, is important. Friday's low, the low, I think, of the 15th of July. And as long as that low holds, that's saying something. Now, what I'm curious is, what is the buying retention? What's the percentage of longs who are long up here who would hold? Right? What's the percentage? So far, we've had one day of liquidation. The position on Friday, and this is the nice thing about market profile, it shows you Friday's profile, right? If we look at Friday's profile, it shows you that 70% of the volume is here. So between 62.50 and 80, okay? And you can clearly see it's being marked up and sold over 80 up to 6,300 tonight. You guys see that? Just look at the path of the blue crap. Okay? I can't say it any more simple than that. Look at the path of the blue stuff. Okay? The blue stuff is the inventory. The inventory has a cost basis, right? You go and buy 100 apples, you pay a nickel an apple. Then you sell those 100 apples at $1, right? You can sell them all the way down to 6, 7 cents before you're taking a loss, right? So inventory tonight is 94% long, right? So out of the 180,000 contracts we've traded, is it 180 this morning, something like that, in Globex, right? Most of those contracts, 94% of them have traded above Friday's close, right? Now, I'm expecting selling exactly where I told you guys to expect selling. I said at 6309 and a half. expect a seller. Now riddle me this. Why did I say that? Right? It's really not that difficult because there's a gap right here. This is a gap. This is what we call a supply gap. When a market gaps and then moves higher, that's a short position. This is a supply gap. There's supply in this gap. The supply comes from all those people who puked out and it went into wholesale hands. A lot of it flushed down here, but we do have inventory in the gap. So inventory equals resistance, right? That means that there is supply above you. That's why forward progress higher is, get the brakes there, right? Put a little hitch in our giddy up, so to speak, like they say back in Saskatchewan. Right? So we've got sellers here. To be expected. What should we expect today? Well, here's my first rule. JJ's rule of paper hanging 101. Right? Taught to me by some very, very talented, extremely smart, highly, highly functioning, very intelligent sociopathic stock promoters. When you dump a market, it's always good to go test the bottom. Right? We've got a bid here. Let's see if that holds. Now, notice the overnight low came nowhere near Friday's low. Right? So there's a clue. Right? That's number one. Number two, we got a seller here. So when you break down a market, you know the size sellers are here, the size buyers are coming in here, and we're going to go do this. So inventory is long. Let's see. The natural course of business is to sell off lower. Okay? So first of all, we'll go look at expectations, Raj. Then we'll go look at the details. Okay? So let's go look. What are you expecting? You know what, Raj? Let's do this step by step by step by step. That way we keep our line of thought. Now, I know this sounds like a pain in the ass, but this is the only way, Raj, that I've ever found any kind of success doing this, is by being anal retentively methodical. When I break that regimental discipline, and you should understand that, then all things go to hell. It's the only way I've had any kind of glimmer of success in this retail trading nonsense. Right? Where it's one of the hardest jobs in finance because we lack resources. The only way for me that actually I got it was by being really methodical and doing the same thing every day, having a workflow. So overnight inventory is long. We should get a move lower. Now, what happens if we don't get a move lower? Then, Raj, comes your short squeeze conspiracy theory, right? If we can't get any lower, the market is trying to tell us that the market is bid. So when you're doing your trading breakdown for the morning, right? You know how people have to have these long trading plans. What you guys need to do is to have a tactical trading plan so it's not you're not looking at a whole bunch of information, but you're narrowing down the information you need to actually make money. So, how do we do that? Right? And this is going to come in handy when we're doing our longer term trade thing that you guys have been wanting. So, let's take a look at the structure. You could see by just looking, if you pretend this is just a half-hour candle chart, I want you to check this out. The freshest short position is here. Actually, it's right here. Just under 62.98. The second one is here at 96. And then you can see The older short positions are down here. Now, older, what I mean is initiated at earlier times during the night session. But you use the bottom of these half-hour candles, that's where the shorts are trapped at. Because when the market comes back down here and it can't take out that candle here, that means that there are buyers here and the market walks away from the buyer to try and get them to pay more. That's how commerce works, right? So if you know that there is a buyer here, why would you sell here? You would raise price and see if the buyer chases you, right? Right. So that's your first level that you're looking at. Let's go take a look at that, because the trade that you're looking at is based on a short. Now, there's a guy who's always asking me, why do you say short, JJ? Well, when overnight inventory is 94% long, right, what is the corrective trade? What's the counter trade to that? Right? You either go with and go higher, which means you need a crap ton of buying, or you need a lot of shorts that are trapped to get that long move, or the most likely move is a correction to inventory. So we start with the more likely, and if that doesn't work, that means this market is seriously bid. So if you're shorting this market here at 6,300, basically your first structural stop is 6306 quarter. You feel me? And you're looking for a break of this level. So short, stop, target. Right? It's all structural. If the market takes out 6306, right, there most probably will go tickle that double top. So why are we looking at a short off the open? Because inventory is long and we have a poor high, which means we have competitive selling at 6310. So those are two clues that tell us we should be looking for shorts. Now, what blows that business plan out of the water? Well, what blows that business plan out of the water is if the market can't break 62.94, all bets are off on the short, at least for now. Does that make sense? Right? Hey, Green, what's going on? Yeah, I haven't even gone into the single prints yet. I'm just talking about, let's talk about trades right off the open before we get into a bunch of stuff that, let's face it, people really don't care about single prints and all that stuff. I know they should, but they don't. So for us, what is the first tactical trade would be to short, right? You'd have to use a larger stop. You could use the top of this period here, which is 6302, and if you're feeling rich, you can put your stop at 6305 if you're short here. First place that you got to break is 62.98, and then you've got to break 62.94, 95. Do you guys understand the thinking behind that trade? There's a tactical reason for that trade. It's not random. Short, first stop, second stop. First target, second target. Right? Now, what if you just keep going sideways like this? That means it's really slow. How do you look at liquidations depending upon multiple time frames? Oh, well, here's the thing. This is what I'm telling you, Charlie. Do you understand what I'm saying? Now, there's obviously a reason. There's obviously, I'm not explaining this properly. So see, don't worry about multiple time frames, Charlie. Just worry about the level. Right? There's been too much emphasis about these trading instructors who talk about multiple time frames operating in the same time frame, which makes retail traders confused as hell because you're wondering who the heck is selling, right? Is that what you're that's what it is, right? Because you're like, is there any follow through, or is it going to stop? Am I going to get trapped short, right? You guys with me? Give me some feedback here. Okay? There's too much talk about multiple time frames. You can't figure out who's selling unless you're getting the order from the brokerage firm. So the thing is, drop it. Who cares who's selling? Use the levels of the market. Here's the simplest way to do it, right? It's a good question. The simplest thing to do is, if you are short, you have to determine, Charlie, are you trading for a long period of time or are you scalping? If I'm short 63.01 and the market can't break 62.98 for maybe 5 minutes or 10 minutes, it's going to rotate higher. So you'll just scratch. Now, if you are trading for a longer time frame, say, Charlie, you got $1 million in your account or a big whack of cash in your account, and you're like, you know what? I'm going to build a short position between 96 and 63.04. I'm going to put on maybe 5, 10, 15, 20 contracts, and I'm going to hold it for a couple of hours. Now, that's a different trade than the first trade I talked about. So what you need to first ask, the first question is, how long do I want to be in the trade? Right? So if I'm a quick trader and I hit this thing short and it starts taking up the upper stops, and we'll go look on the candle chart and you'll be able to see, you'll see exactly whether or not there is follow through. And that leads us to our next chart, which is where we watch the offer. Okay? The offer or the ask tells us exactly whether or not the selling has follow through. When you see a market trade like this, this is very mechanical, precise trading. This is distribution. So there was distribution here, then they put it on sale. Then they put it on sale, a little discount, that brought in more buyers, right? A little discount brought even more buyers. A little discount, let's see if we bring in more buyers, right? These liquidations, if they don't hit certain levels, you know, say you were short at 63.04 and you had your stop here at 6 or 5 3/4. If the market got under 62.99 at a quarter and it didn't break these levels here, you knew to cover the trade. And you could still, if you were short 3 and you covered flat at 6,300, right? That's still 3 points, right? And you can cover off. Does that make sense? Because once you start seeing this tiny chop over a longer period of time, you know that this is not tradable. So you can close out your trade. Hopefully that makes sense. Now, Charlie, if you're short here and the market came here and it took out 98, if it took out 98, then you'd look for 94. If it takes out 94, you look for 62.90 and VWAP. Get it? So that's how you monitor the progress of the liquidation. If the market liquidates just down to a certain level, hits it and bounces, right? That's just an inventory adjustment. If you have a larger sell-off, it'll continue to take out the lower levels. And if it's a severe liquidation, it won't even pause at those little levels. It'll just go right through them. Does that make sense? And that is something that you will get from looking and watching over time, right? The only way that you will actually pick that up is by watching a market. And you're not, if you're stuck in a trade, like if you're trading, you're not going to observe those things. If you're constantly trading, right? Not to say that you are, but most people never spend the time observing. When you make observations, when you don't have attachment to the outcome, you can watch things in a much more objective manner, and you can gather an insane amount of information. When you watch the market trade with no attachment to outcome, it's freakish how much information you can pull off a 1 minute chart, where you don't have to spend another dime on software as long as you live, right? Where honestly, you'd be able to trade if they gave you a golf pencil and a piece of paper and gave you the price just off of time and sales, right? The more tools and indicators and all that stuff that you look at, the harder it is for you to execute, the more muddled your execution will be. You won't have a clear execution plan, where an execution plan should be like a boxer. When they throw a combination, they move, they throw the combination and they move. It's like second nature. It's not they're not thinking about the punches they're throwing. Right? Trading should be fluid, and you have to practice your execution over and over and over and over again. Right? So the market's a little slow here off the open. So trades off the open. If you're short 62.98, then 62.94. Those are your first two downside targets. If you're long, well, if you're long 63.05 and a quarter, and then 7 and 8. Those are your upside and downside targets just off the first open. Those are the rotations we're looking at. Right? So if you're short and we get down to 62.98 and it can't break it, cover. If you're long and we get up to 63.05 and it starts to stall out, well, you know what to do then, right? Let's see what happens off the open. It's a bit of a seller at 2. Yeah, a little aggressive too. 63.02, there is a seller. Let's see if we can get it past. If we can't get it up over 63.02, then you know. Do you guys notice every time we come up to 2, 2.25, 2.5, they hit it? If that continues, that might help the shorts off the open. Still a little early. Hey, AZS, how you doing? It's a little bit jumpy, Sadiq, because every time we get here, they nail it. There's a not aggressive, but a slightly aggressive seller at 2.25. So if you were shorting, use 3 as a stop. Give your seller a couple of ticks to move around. Because if you lose that 3 seller, we'll rip right up to 5. So say you're short 63.01 and a half, right? You don't want to spend more than that on a stop. Hey, Sonny, how you doing? Hey, Francisco, how you doing? Hey, Renee, how are you? See, that seller's still there at 2.25, 2.5. Always remember, if you're short, make sure you've identified that there's a seller. There's no reason to be short if there is no seller and the sellers are not competing. Yeah, see, they cleaned out the seller. Should be able to get up to the 4.5 area, 4.25 area. That stop right there is at 5.25. Might want to sell before that. There we go. That was nice. I'm flat. I just bought the open and sold into this just for a couple of points. As soon as I saw that seller start to lift, I knew long was the trade off the open. You could see that from the opening auction. There's that poor high from the overnight. Let's see if we can take it out. Remember, there's a lot of people that are short underneath us, right? And they're expecting that overnight inventory correction. But remember, I said, what happens if it doesn't correct? It will rotate up. And who was asking? Charlie was saying about how do you know if there's no follow through? Well, we saw that seller at two and a quarter, two and a quarter, and then all of a sudden it started to lift, so there was all of a sudden no follow through. Oh, okay, the seller's cleaned out. Overnight high to the tick. Back down. I didn't hit that trade. Not fast enough. Looking for the previous day high at 11.5. If we get accepted above 12, we'll be in the gap. Okay. We have no idea what's lurking in that gap. I'm just looking to see if we can hold over yesterday's high. I mean, Friday's high, sorry. Just use the levels I've got on my candle chart here. 1, 2, 3, 5, 6, 7, 8. Wouldn't that be a trip if we actually went and filled the gap today? We're just trading the levels. 12 to 14 and 3/4. I'm out at 14 and 3/4. I'm just scalping long, using my levels. And I'm not even waiting till the top of my level. I'll take the middle. I don't mind. So all I do is when it holds my level, like not right now, wait till it gets back up over 12 and 3/4. It's not quite ready yet. Just watch the offer, right? Just relax until it's offered at like 14. See, it's starting to perk up. So it holds that. I'll just grab one or two and then put my offer out. So as soon as it goes up, it takes me out. A couple of points here, a couple of points there, it adds up. The thing is to not be too early on the trade, right? So had I bought it there, I would have just put my offers up here. If I was long 13 half, I'm selling 15, right? I don't mind. I'll take a couple of points here, a couple of points there. My target's 17, but I always like to sell before my target, especially in choppy price action. I don't know what's in this gap. So Raj, how many people do you think we got short in that overnight session? We're looking for 19 and a quarter now. Right. Obviously, buying retention's not that bad. Let's see where we got to wake up the sellers. They got to be around somewhere, right? Let's see where they wake up. And of course, everyone was expecting lower, right? Where was Friday's overnight high, Raj? Oh, that would be a gap fill, Friday's overnight high. It was like 63.70 and change. There were two distributions on Friday's Globex. The the top of the first distribution is 33 and three quarters. Bull trap? Nah, it's just inventory, Troy. It's just inventory. Here's the thing. In stocks, people like to trap people. I know I used to like trapping shorts, trapping longs, right? I'm an equal opportunity, you know, punisher, right? I'll trap the long shorts, I don't care. As long as I can squeeze money out of them. But in a market itself, there isn't like a couple of people running it. But because institutional traders are all trained to think and trade the same way, we have a tendency to all trade the same way, which makes the market feel like it's run by one person and that it is actually a trap, when it's really not. It's actually just human nature. People love to follow price, but they never observe price. They just follow it blindly, right? My analogy to that is like, that's when you follow the really pretty girl out of the nightclub at 3 in the morning down that dark alley, but you're not really paying attention. That's what happens when you follow price, right? Wake up in a bathtub full of ice missing a kidney, right? You got to pay attention to price. You just can't blindly follow it. Too much time in Vancouver. Too much time in Vancouver. Okay, we got a little bit of selling here. Good, good. Let's see if we can continue. Right? You got to watch price and how it behaves. Can't just blindly follow it. The cost basis I used this morning, oddly enough, was the cost basis from the liquidation. It was 63 quarter to 67 and three quarters. Now we are at 8 times cost basis. So we should be having a little sale here soon. Let's see. Let's see. If you want to scalp short, watch the end of this candle. Now, I sold one at 19 and a quarter. And I'll sell another one up at 20. And I'll scratch them both if they get to 21. 21 quarter. Right? I'm just short one at 19 and a quarter, 20 stop. And I'm looking to see if we can get under 17 and a quarter. And it's already starting to look like it's not going my way. Let's let it breathe for a couple of ticks. Let it wait. Should let, yeah, there we go. Now I'm going to put in a bid at 17 half. I'm short 1963 on 2. I'm going to take it before. I'm just going to get paid. That was like three little points. See, good thing I took it back there. Where I've been getting into trouble on the short side, I'll short it because I see a seller. And then instead of covering, I'll put my tick at, I'll be like an idiot, and I'll put my thing at 17 instead of 17 and a quarter. As soon as it hits 17, I should just go cover, which I did this time. So maybe I learned something. Maybe I learned something. And that coincided with my kidney analogy, right? Because what's usually been happening is I've been trying to get the short a little to pay a little bit more than it actually will. And when they don't trade at that level, I'm too quick to go grab the offer. This time I saw it hesitate and I just bought it back. Looking for higher now, 24 and then 26 and a quarter. Dear God, they're not gonna. So there's got to be a seller somewhere. Where did I say 33 and 3/4 is the top of the net of the distribution from Friday night down? I'm just going to mark it just in case we get up there. I'm curious. You guys know in the room what I'm talking about? Anyone who's running market profile? Here, I'll post it in the room. Let's see if it works. So the distribution where all the value is, the top of that before the single prints down is 63, 33 and 3/4, which is a mouthful to say. So, riddle me this. How many people are trapped short? Think about it. The only reason that you can tell that a lot of people are trapped short is because the market's just ripping higher. We're up 60 points, right? If there wasn't a short trap, we'd be down at Friday's low, testing that out. Amazing. Buying retention wasn't bad. Nobody wants asset prices lower. Think about it, right? We get these margin events, right? We get a margin event where everybody gets shaken out of their position, and that shaking shakes people out into wholesale hands. Then what? Wholesale takes it and sells it right back to everybody, just like a used car dealer. If this thing stops at close to 34, I'll laugh my ass off. Excuse my language. Sorry. Yeah, the world really has changed because of settlement, Raj. You're right. I don't know if they're easier, but different. Definitely different. We're creeping up. That's a big gap, Michael. I mean, it's a 50-point gap, right? Is it 50? Yeah, it's 50 points. Jeez. The ranges in this market are just insane. Ah, thanks, Ali. 63, 30, well, let's call it 34. We're in the same neighborhood. The funny thing is, if we accept over 30, we'll be into 16 times cost basis of the move higher. I mean, of the liquidation, which is pretty crazy. $33 3/4 to a quarter, somewhere in there. $32.5. We're close. Okay, off by 5 ticks. Pretty cool. I mean, market profile is pretty interesting. You can learn a lot from it. $32 seller. I mean, I wouldn't be trading it right here. It's a little too unpredictable for me. A pullback would be nice, yeah. Well, the last pullback was 2 minutes. Wasn't that enough for you, AZS? How much time do you need? Just kidding. Here we go. A little look above and fail of 30 3/4. Oh my goodness. I'll wait to the next candle. If we close this candle under 30 3/4 and open the next one underneath it, look for a little inventory correction down to the 26 area. If it creeps back over 30 31, see, sellers start competing. As soon as the sellers start to compete, right, that's at the top of the candle. So if you're shorting, put in a lookout bid here. What's a lookout bid? A lookout bid tells you whether anyone's got anything for sale. Because if you got a buy order at, say, 27 and you're short 30 against 31, right? If you can't get filled at 27, then the market's trying to tell you, psst, 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 nothing for sale. You're going to have to pay more. Now we get to see where they're really short on the way up. Where the bid will be is where the larger short positions are. When a market liquidates, right, and it corrects after a move trend up, now it's going to backfill. It's going to backfill to where those shorts are really bid. There's 27, there's 26 and 3/4. Nice. If we get under 26 and a quarter, look for bids at 24, 24/4. Watching 26/4, can we offer underneath it? Here we go. Nope, they took it. And here we go again. Give them more. Just watching the offer and watching 26 and a quarter. Offers over 26 and a quarter, which means they're taking it. When they're taking it, means that there are buyers, and the sellers are raising price, like so. Next candle opens now, right? Let's see if it can get down to 26 and a quarter. Just watch the offer, watch 26 and a quarter, right? Now, there should be a seller here at 29 and a quarter, 29 and a half, right there. There's 29, 29 quarter. If we have strong bids, it'll lift to 30 and 3/4. Mm. Dollar man, you're not crazy. I've always been very curious if anybody actually kept track of that. I've always thought the same thing, but I've never tracked it, so I've never said it out loud. If it takes out that A high, it'll blow a few stops. It'll create some buying. So then look for 33 and 3/4. Right through it. Nice. Yeah, I was off by 2 ticks. Try a little short here at 32. See if we can break 30 and a quarter. Bought one back. Bought two back. And flat. I was trying to short 33 against 34 and a half, but I didn't get my execution on until 32. A little sloppy. Nice work, Raj. Well done. Catching more bids. I was just shorting the backfill, Kyle, just to find the bid. I've gone long as well. I was curious about my level. I came up with this 33 and 3/4 level from market profile. So I thought I'd see whether they would sell into it or not when we got up to it. See? That's why I took that little short. But I wouldn't be shorting it now. As we're into that gap, I take test trades just to see whether or not what I'm thinking is right. Hey, Dan. And also, I also take test shorts because I know everybody and their dog is shorting it. So I'm trying to find places where they can try and cover, or where they should, if they're considering shorting it, not to. Right? I'll short it to find the bid. So I can tell people where the bid is. Hope that helps. It's a different way of trading. It's something because I used to put markets together, right? I used to create charts and try and sell, like, millions and millions of shares of stock. So structurally, I'll look at a chart and go, okay, we shouldn't be shorting it, but I know that people are, because everybody shorts a move up because they just do. So I'll get in there and try and help them by saying, okay, the bid is here, don't short into this bid. This actually would have been a decent look below and fail of 30 and 3/4. Oops, I missed that one. Still got some weekend brain going. My brain's not fully into work mode. It was a very lazy weekend. Yeah, in the old days, Kyle, traders would short, find the bid, and then they could turn around and go long off the bid. Something else that I forgot to do today. I should have been long 28. And then long again at 32. Got to work on my discipline. Need to work on my discipline. that's pretty much every Monday I need to work on my discipline because I still feel like it's the weekend, which is really weird. I guess that's what happens when you work out of the house. One of the pitfalls of working from home. For me, as a retail trader, one of the biggest challenges I have is discipline. I get bored, right? I get bored, I get distracted, right? No Crocs here, Raj. I haven't worn a tie in decades. My next sort of larger, major level is, I think, 49 and 3/4. 49 quarter. Jeez. Guess nobody was expecting this, huh? It's the thing in this market. Just when everybody gets short, they just rip the supply. It's brutal. It's absolutely brutal. It slowed to a crawl, Hank, because nobody wants to buy it. This is all short covering and FOMO longs. That's who's buying this market now, brother. I was just thinking that truth. If it starts going sideways here, I'll redraw my balance zones. We're already at 16 times, right? It's nuts. Yep. The more people, you know how people go, why does the market keep going up, Kyle? It's because people keep shorting it in the wrong place. This market went to its all-time highs based on a lot of short positions, and they never really got resolved. So they just got added to, right? You need to see that balance, Michael. I don't see a balance just yet that's worth doing it. I've already got the lines up, so I'll just let them be for now. I'm kind of hoping we get some liquidation in the next hour. That would be nice. We don't need to fill the gap all in one day. You know what I was hoping for? Some nice back and forth trading in Friday's range, eh? So much for that. Jeez. Yeah, not to mention the constant inflows from funds. What levels would look to short at? If we got back under 30 and 3/4, I might take a stab at it, Sean. Then it'd be a look above and fail of eight, 8 times balance, 8 times cost basis. So the more likely it is to work is the higher away you get from your cost basis, the better the short should work out. Anybody had breath this morning? Yeah, the constant inflows from retirement funds, right? Don't forget to contribute to your 401k, ladies and gentlemen. How can you find what, Hank? Oh, market breadth? It's under. Thanks, Elian. It's under. If you go to find symbol and then go to market stats, they're all here. There's, oh my God, there's a million of them. I'm just curious. 4-to-1 breadth. That's actually not bad. Thanks, Peter. Thanks, Elian. That means there's 4 times more buying volume than selling volume in the good old S&P or the New York Stock Exchange. Sorry. Jeez, not the S&P. What am I thinking? Oh, telling you. Oh. So this is distribution. So if I'm a scalper, so the way I look at markets is as soon as I see a seller, I'll short it, and then I'll put some bids in lower. Not right here. But what I'd like to do it for it to go above 30 and 3/4 and then come down and then offer and then do that. That would be a nice short. Let's see. And today, I have to admit that my usual taking longs, maybe it's because I've been hanging out in the room, I got a little influenced with the short sellers. I was like, yeah, wouldn't mind taking a short here. Kept going through my head. Now, I wasn't structurally short, but gosh darn it if I wasn't thinking, maybe sell a few. It's weird how bias creeps up on you, right? You think you've done everything to get away where you're not going to be biased, you know? And it creeps up on you. Ah, well, Michael, today you hit the nail on the head. I should have been thinking about backfill longs instead of thinking about backfill shorts. You know what I mean? So I zigged when I should have zagged. Not exactly the best discipline and focus this morning on my part. So that goes in the old trading journal. Yeah, I still made money, but not as much as I should have been doing. Just sometimes in the wrong direction, thinking the wrong thing. Your thoughts are muddled. You're not quite, with the program. Eh, always room for improvement. Always room for improvement in this business, that's for sure. I was biased off the get-go with that overnight inventory being so long. I was just kept looking for the short, looking for the short. It just wasn't there. See, it dipped underneath 30 and 3/4 and then boom. So if I was looking to go long now, just in case, right, you'd be buying 33 and 3/4, maybe 34, right? 33 half. And you're going to work it against 32. Say if you're thinking long, right? And the market holds 32, you're in okay shape. If it starts losing 32, you know the trade's going to start going bad, right? You know there's a seller at 35/4, so you're long 33, 83, maybe on a 2 or 3. Put a 35 seller out. See if you get taken, right? If you can't get taken at 35, like right now, I can't get taken at 35. So I don't mind selling it at 34 and 3/4 if nobody wants to buy it. You know what I mean? Right? I'll hit one at 34 and 3/4 and hit the bid there. And if I see it struggling, okay, out 34 and 3/4, I got one left. I'll go 35/4. We can't get up over 35/4, hit the bid and you're out. Right? And that's how you trade tactically. Now, that's a small trade. You're not going to make a lot of money off of it. But what you're doing, right, is you're training yourself to react without second guessing yourself. Right? As soon as you're long and you see a competitive seller, hit the bid and get out. What's the use of being long? Right? Now, if you're building a position and you want to be long tactically, you use 32. So if I was buying it here and I could still hold it, but as long as it starts, if it takes out 32 and 3/4, 32, then I know, start cutting contracts. Right? Where do you think I learned it from, Kyle? Right? So this way it worked out where the lows actually held the 33s. Yeah, I learned it from reading about it, but I didn't put it into action until, Jesus, at least a decade after I read it for the first time. At first I didn't know what he was talking about. It seemed like I did, but when you get in the chair, right? When you get in the chair, you don't remember all those things under fire. That's why you got to sit and watch markets and practice and practice and practice, right? Yeah, deals are back, Michael. It's good. It's good. It's going to be a good fall. It's going to be a good fall. You know? I think so anyway. Plenty of deals on the street, lots of cheap money flowing around, right? What's not to like? Yeah, one chart. The beauty and simplicity of just having one chart. Gosh. And once again, of course, I sold too early. That's okay. It's always the next trade. And one thing you'll notice about me is I never trade like it's my last trade. Right? There's always going to be another trade. Hey, Taco, what's going on? Ah, getting some work in? That's cool. Does anybody else have any questions? Anything they want to look at? I don't even have my equity charts open. Palantir's reporting tonight? Will do. Let me open the chart. So I guess we're about halfway up into the gap. PLTR. PLTR 159. My 16 times balance price target on Palantir is 172. And Adobe, I don't have Adobe. I'll do one up. Coin 318. Coin's got a little overhang on it now, right? So this is, for folks who are interested in our room, a little plug for our room here. Not only do we do ES, we do lots of equities, and I put a lot of charts in for the equity folks when they want. The levels seem to work really nicely, right? The techniques that I teach are fully usable in equities because they're based on the same business of inventory. So inventory in coin now is long above 342.91. That's why you've got selling pressure. The cost basis before the move is down here in the 260s, right? So worst case scenario, it comes back down to 260 and reestablishes itself. Right now, what's going to happen in coin is this is really price exploration. So you don't really know where there's a 2-day little balance there. It might come into that 293. So watch 293, and then if it breaks 293, look for around 270, 260, just to the top of cost basis. What else were you guys looking at? PTHL, I don't know that one. Well, I'm glad they're using shell companies. Someone's got to use shell companies. With coin, uh, the best coin setup would be a look below and fail of 195, right? But I think somewhere there, along somewhere in here, on the short side, I don't know. If you're shorting, use the top of Friday's bar and 342 as your out. There's supply here, right? There's a supply gap, right? Micro squish. Yeah, Microsoft's doing really well. You know, when I think of this stock, I always think about $40 a share, $30, $40, like the 80s, 90s price. Look at it now, right? It's in our cost basis was 398 to 433. You're in 4 times cost basis here, so it's pretty amazing. Nvidia's doing well too. Yeah, they're all really doing well, except Crabapple. Crabapple is kind of down in the dumps. Sellers at 214 and 225. It's gotta. We'll see. They gotta come up with a new iPhone made out of soy or something. You know, you talk on the phone and then you can eat your phone. How about that? Oh, Goldman Sachs, yeah. Hmm. NQ hanging in there like a champ. I should put in the SPY levels. Nothing going on in the ES right now. This is just pure distribution. Look at that point of control move up. Friday's point of control was under 62.65. Now we got distribution up here at 63.38. Unbelievable. I should hope so, James. That's how their economy survives, right? That's just the business, brother. It's just the business. It's good distribution. It's good for wholesale. They're getting rid of all that cheap inventory that they bought, that they were forced to buy, right? Got shoved down their throats on Friday. Like, buy it. It's like that episode of Billions where the oil refinery is going to explode, and they had to do phone trades, and they're on the phone with their market makers. The market makers don't want to buy, and they're like, take it, take it, take it. Oh, that was good. Uh, uh. You're out, AZS? How did you do on the short? Oh, man, up here, I don't really want to go long up here. I mean, I'll scalp long, but position long? Ugh. There we go. Scalp longs will work. Where's the next area of interest, folks? I'd say 63.46 and a quarter. that's where the first distribution was on Friday. I think a lot of people got trapped Sunday night, Jeff. Friday late in the day and Sunday night. It's a very frustrating thing for short sellers in this market because the supply only lasts for a day. The market sells off for a day, and then the next day it's right back up. I mean, I'm not a position trader, but boy, it must be a just frustrating thing for position traders to have to deal with this. You just imagine. One down day and a reversal. Jeff, it's like those cheesy stereo stores in the 80s. Prices won't last long at Crazy Eddie's House of Hi-Fi. One day only sale. You snooze, you lose. Everything's off half price. You got did your wife stick you out in the garage? Oh man, sorry about that. You're like the dude in the King of Queens. You're stuck out in the garage. Well, folks, thank you so much for joining me. Really appreciate you being with us. Come visit us at the Trading Syndicate. I'm JJ. Come learn how to trade with some common sense, where you can manage your risk. Things don't get out of hand. We'll teach you how to execute. We'll teach you how not to hesitate, right? Come hang out with us. It's only $20 a month. And we'll teach you how to pass those evaluations so you can trade with other people's money, like our friends at Apex Trader, right? I really appreciate you being with us, and we'll see you tomorrow. So we offer all sorts of stuff in the room, from these sessions all the way to one-on-one mentorship. If you're interested in that, reach out. I'm around. Thanks, everyone. We will see you tomorrow. Really appreciate you being with us. Bye for now.